Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday and October 29th. Wow, we're wrapping the month up here very quick, and before you know it, will be Halloween. This week we got a lot of data coming out. We got mostly jobs reports coming. We have the big one, the BLS jobs reports this coming Friday for the month of October. We'll have, of course, the weekly jobless claims on Thursday, and then Wednesday, of course, will be the ADP report. But today we got personal spending, or personal income, excuse me, for the month of September. So in August, we had a 0.4% increase in personal income, which is obviously a good thing. People are making more money. Forecast is supposed to be that same path at 0.4, but came in a little bit lower at 0.2% in growth here for personal income. However, now we got the opposite spending, so people earning more money now, they're spending more money, and we see a pretty good increase here. We had August, a 0.5% increase, forecast supposed to be at 0.4, and it came in expectations at 0.4%. So in the month of September, we see people spending more money than they were, more money in the increase-wise, percentage-wise, compared to what their personal income was, increase was. PCE, or also personal consumption expenditure. This is inflation on the consumer level, which is the Fed's favorite gauge, which you'll see the next one down, which is the core inflation, but this is the headline number. Back in August, we had a 0.1% increase. The forecast was supposed to be 0.1. It came right in expectations of 0.1%. However, the year-over-year number here went from 2.2% down to 2%. So we had a drop in the personal consumption expenditure. Now, when you remove items like food and energy, that's what gives us the core PCE, or also core inflation, for the month of September. And the previous month, in August, we had 0%, so it's unchanged. Forecast supposed to be 0.1%. Came a little bit hotter at 0.2%, but which was okay because it remained unchanged year over year at 2% here. And that's the Fed's target rate of where they would like to see inflation. So let's go ahead and jump ahead here to the headline news. Stock market is up today. It's Dow's up over 200 so far today. We do got more earnings reports coming up. There's no real big news on the earnings reports. I did see a report that so far 81% of the corporate earnings reports that have come out have exceeded expectations, which is obviously a good sign. And then also there was an announcement with IBM looking to purchase Red Hat software. And then what kind of seems to be moving the markets more is what I'm seeing the most attention to is China. China looks like it's not yet fully announced, but there are reports coming out of China that looks like they're starting to feel the effects of the tariffs, and it seems like the auto sales have been dropping every year, and so it looks like what they might do to kind of get things moving over there is cut their tax on auto tax in half. It's going from like 10% down to 5%, and they're hoping that might help stimulate things over there. So stock market globally is liking that, and things are moving up, especially on the auto industry and automakers who have ties with China, sending over autos like Ford, Volkswagen, people like that. So, so the Q is looks like that's what's kind of helping drive the stock market today. The bond market is going the opposite effect. We're down about 12 basis points, which translates to enough for a slight pricing difference. So pricing has dropped a little bit, or worsened a little bit as a result of it. As you can see here, we were testing the 25-day moving average on Friday. Right now, it's kind of holding and pushing this downwards. We've got a lot of room downwards. So we have to be a little careful here. But I would say pricing worsened slightly from Friday's numbers here. 10-year Treasury. So as you saw, we broke below the 25-day moving average, and even the floor of support. We're kind of testing that so far today, and we're at the 3.11 or 3.11 rate right now. So we're kind of testing that level right now, which was our floor support. Now is our ceiling of resistance, and we got a little bit of room down to about 3.05. As you can see, it'll be the next floor here. Oops, sorry about that, folks. So yeah, that pretty much wraps things up. If you guys want any more information, please feel free to come jump over to Twitter. You'll find me at Mike Bjork on Twitter, and that's where I post pretty much all my updates. You guys have a great rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye-bye.